Hello, hello, hello. Happy Thursday afternoon here. Today it's a holiday here in Brazil, Corpus Christi, so everyone's out finishing up their barbecues and playing soccer. And I'm going to spend the next 10 to 15 minutes talking to you guys about what happened today in the markets. For most of us, we had a pretty okay time in the markets. As a matter of fact, if you look at just Mag 7 stocks, you would assume that today was one of the worst days of the year. But if you've been buying strong stocks, you've been using the tools that we talk about all of the time, being able to figure out which areas of the market are giving us better odds, which types of stocks we should be buying. It's never necessarily a bad idea to own some Mag 7s, but if you're overweight Mag 7s, just because they're Mag 7s, well, occasionally you get caught, and today was one of those days. Mag 7 finishing down on the day 2.45%. A particularly bad day in Mag 7, but it wasn't just all of them. Some of them were absolutely performing worse than others, particularly the tech-related Mag 7 names. If we look at Microsoft really quick, we can see that Microsoft did not have a great day. On the contrary, Apple had a pretty okay day. So it wasn't a blanket statement of all of the Mag 7 stocks were down today. It was more so a couple of the Mag 7 stocks were down rather large. Tech in particular got hit today. Nvidia down 3.77%, did eclipse 1 ADR, meaning this was a pretty volatile move. Microsoft down as well. All kind of following this Salesforce move post-ER. Salesforce ending up down here at negative 20%. But actually, I'm sitting here painting kind of a daunting picture. If we look at the watch list and some of the other moves, this was not a particularly bad day, actually, across the market. Now, the S&P 500 and the Qs are obviously overweight tech. Yes, the S&P 500 is overweight tech as well. It's the number one sector within the S&P 500. But if we look at the rest of the sectors, we actually had a pretty good day. And as a matter of fact, if we look over at FinViz here, we can see that a majority of the screen's green. Some of it's very green. Microsoft and Nvidia, really two of the bigger components of today's drawdown, at least from a market cap standpoint. You can see that that did permeate through the tech sector in particular. If I hover over here, you can see some of the bigger names down: Microsoft, Oracle, Adobe, PanW. So tech in particular, they came for. Once again, other areas of the market held up just fine. As a matter of fact, financials bouncing today. We had some energy plays bounce today. We had industrials bounce today. But hell, even inside of technology, plays that we've been talking about for the last few weeks, we've been adding in on, etc., we're up today. Look at this hood play. I just added in off that 21 area pivot yesterday. This is the third opportunity for us. We have 3 open positions in hood. A fantastic continued move here. A really, really nice play. Some of our apparel and retail related names. Very, very nice moves. Sustained moves here. Not bad. So if you're only judging the market at face value, meaning those two stocks in particular, Microsoft and Nvidia, really pulling down the full weight of the indexes, you're not going to get the picture. The full picture here is that actually market breadth wasn't that bad. As a matter of fact, market breadth was up. RSP was up on the day. Now, this isn't saying that we're out of the woodwork and it's time to go full max long, max port, all of this stuff. What I'm saying, though, is if you're just looking at the value of the Qs today, you're going to miss some of the good stuff that happened today. And I'm going to tell you right now, it seemed like earlier this morning we got a bunch of data that came out. It was softer. The market rallied off of that, but the Salesforce earnings really kind of snowballed out of control and caused a lot of the software sector and software industry group, and internet industry group start to snowball out of control to the downside. We'll look at that in a second. But a lot of the other sectors and sub-industry groups really took off of the soft data. As a matter of fact, bonds ended up. We had a good day in bonds finally, 1% to the upside. Once again, by no means are we out of the woodwork with bonds, but anytime bonds aren't going down, the market tends to rally, and that happened again today. The dollar, down. Still not below that 200-day moving average, but down. So it's a down day in the dollar, an up day in bonds, and a majority of the market, the average stock, did pretty good. your account probably reflects that. If you're buying different types of the market, different types of stocks, you're not overly weighted in something like an Nvidia, then today probably didn't feel that bad. As a matter of fact, for me, I finished the day minor up. It's about a 2% day today. As a matter of fact, if we flip over, I'll show you the Funny Money account that we used to talk through all the time, but I don't really talk about it a whole lot anymore. If we flip over to the Funny Money account, you can see that we actually ended up. Actually, over the last month, I'm up 30% on this. This is a Funny Money account that we started at the beginning of the year. It's not the end of the world. Continue to look at those strong stocks. Once again, you don't have to own Microsoft exclusively. You can own it. It's a Mag 7 stock near all-time highs. There's going to be an opportunity to own it, but you don't need to throw everything you have into it. You don't need to chase the NVIDIA breakout. As a matter of fact, we have zero NVIDIA exposure. We don't have any. We have other semiconductors. We don't have any NVIDIA. And the market did not punish the surrounding names within semiconductors like they did NVIDIA. It's just that simple. So look at what you own. That's kind of been the big topic for us today. We put out a premium newsletter. If you're inside of TTI, I encourage you to watch it. I go into depth, a bunch of different areas of the market that have not performed well during this bull market. We're in year 2, guys. Year 2 of a bull market. Has not performed well, these certain sectors, but other sectors have outperformed. So it's not just, hey, it's a bull market, go own stocks. It's, hey, it's a bull market, but know what you own. All eyes right now are on the PCE, the core PCE numbers that are coming out tomorrow morning. I have no idea what's going to happen here. The data was soft today. It allowed the markets to rally. You could tell that there was some interest rate sensitivity stuff going on because the most hard-hitting sectors when it comes to interest rates going up had big rallies today. Real estate, utilities, you saw bonds pop up, small caps, which is why you're looking at this. As interest rates go up or the threat of rates staying higher for longer grows, these areas of the market probably going to get hit hard. Debt becomes more expensive and these types of investments become less attractive. But in a market that maybe they're starting to think, well, PCE and the rest of the information that came out this morning was soft. Tomorrow, possibly alluring to another soft print. The idea that the rate increases that they've been kind of tossing around, yes, a rate increase over the last 4 weeks, they've thrown that potential idea out there. Maybe that's not going to happen. A clue here is to look at how these interest rate sensitive sectors are moving today. Nearly all of them are up. You want to know which sector is not necessarily impacted by higher interest rates? Tech. Most of these companies are flushed with cash. They don't need to incur lots of debt. So just something to think about. We're building this big puzzle together. There's a million different pieces. It can get overwhelming, especially if you're concentrated in a Mag 7 that came down like crazy today. As a matter of fact, the market didn't do too bad, which I'm surprised. I thought at market open we were going to have a terrible day. If we go back to some levels really quick, the S&P 500 is testing a previous resistance, now turns support. Does this level hold? I think if the 520 level holds, I think there's a real opportunity here for the next leg up. It all comes down to how the market reacts to that PCE number tomorrow. The Qs, which had a lot more to give, still aren't down there. It feels like the end of the world, and realistically, as of right now, we're currently about 2% away from all-time highs. I think it's important to keep things, keep things realistic. Did you own Salesforce? No? Then don't worry about Salesforce. It's the 6th largest component within the tech sector, XLK, but it still only equates to 2.5% of the weighting. So it's maybe not the end of the world if the broader market is going up with Salesforce coming down a little bit. Now, I'm not saying it can't be a canary in a coal mine type stuff, but is Salesforce really going to be the stock that breaks the camel's back? Maybe, probably not, though. A lot of good things happened today under the surface. We were able to take some profit off of the Dell trade prior to earnings. Going to go ahead and flip over here, and you can look at some of the stuff that we were posting in Discord. So the hood trade that we had on, some of the guys inside of the Discord had on. I did not take this trade, but we were up near 2,000% prior to earnings, right? They took some profits yesterday. Dell down right now after hours. But we were able to take profit, huge profit yesterday, and leave just a small portion of the trade still on the books through the ER event, so letting it do whatever it's going to do. This is just classic TTI type of trading. Let the strong trends continue to trend. Manage risk prior to an event like ER. And then let a small portion of the trade continue to go on in the event that the market does gap this thing up. As of right now, it looks like it's going to gap Dell down tomorrow. Still a fantastic trade, made a bunch of money. See the Birkenstock trade here off of ER. Shout out Billy. And some of these hood plays I was just talking about. We talked about this a lot at the 11 a.m. slot. Hood has popped up on our radar for 2 or 3 weeks straight. This is a strong stock. It's hitting a bunch of different reports for us. The up-and-comers list, the future leaders list, the growth leaders list. It's all over the board. You know a strong stock is strong when it's on multiple strong reports. Pull up a chart, buy a pullback. And that's exactly what we've been able to do. Pull up the chart and buy the pullback. Strong stock for us. I expect big things through Q3. Opportunity for us to make a bunch of money on this and a couple other plays, right? So once again, kind of big theme here wrapping this up is it's probably not the end of the world, guys. Mag 7 is down, particularly tech. Other areas of the market are up. This is not a bug. This is a feature of a bull market. Sectors rotate. Is tech going to take a back seat for the next leg up? I have no idea. We're going to know more tomorrow morning. But as of right now, at least inside of TTI, we have a bunch of different positions, diversified across leading sectors and some strong stocks. And today should not have felt too terrible for you. As a matter of fact, probably should have made a couple bucks today, which makes me feel good. My name is Hamilton. I'm here at the Trading Initiative. If you're not already signed up, every morning at 7 a.m. I send out a free report highlighting some portion of the market, strong stocks that we're looking at. You can look through the list every morning, find stuff that you like, and if you like it, take it with us. It's completely free. Links in the description below. For everybody else that's already signed up, I appreciate the nice emails that you guys send me every day. I don't know if these daily updates are worth it. Please let me know if you've watched till the end here, if I should continue to do these or not. I try to give my thoughts here about 5 to 10 minutes at the end of every day. I just don't know if it's worth it or not. So give me a shout out if it is, and I'll continue to do it. If not, I'm going to go back to just writing these up instead of filming them. Enjoy your Thursday.